QuickBooks Online 2025 transfer form. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser searching for QuickBooks Online Test Drive, the free sample company file available to everybody looking for a result that has Intuit.com and the URL because Intuit is the owner of QuickBooks. We're going to be choosing the United States version of the software. I'm going to close that tab to the left as it is no longer needed. Verify that I am not a robot and continue. If you are a robot, then you have to decide, am I going to lie to the system or something like that if you still want to follow along or not, or else you'll just have to follow along without the QuickBooks Online sample company file. It's up to you. But here we are. We're in the sample company file, Craig's Design and Landscaping Services, opening up the major financial statement reports like we do every time. The reports, they're on the left-hand side. In the favorites, we're going to right-click on the balance sheet, open a link in a new tab, right-click on the profit and loss, otherwise known as the income statement, open a link in a new tab. By the way, these two reports are the major financial statement reports and therefore are everybody's favorite. It's not a matter of choice. If they're not your favorite, there's something wrong with you. Let's go to that middle tab. We're going to close up the hamburger and we're going to change the range to a 2-year time frame. 01/01/24 tab, 12/31/25 tab. Selecting the drop down to see it in years, running it 24, 25 side by side down below. Tabbing to the right, closing up the ham boogie. Again, the range needs to be the same. 01/01/24 tab, 12/31/25 tab. Selecting the drop down to see it in terms of years, running to refresh, noting nothing's in 2025 except for that $53.99 for some reason, including prior presentation transactions because we refreshed the browser and opened incognito window, which I recommend you do as well between each presentation so we can refresh the system. Let's go to the first tab, and if we select the plus button, looking at the forms as we have been organizing them into cycles, the forms under the cycles of the customer or revenue cycle, vendor cycle, or the payable or expense cycle, the payroll cycle, and now we're over here in this other forms. What is the other cycle? Well, it's not actually a cycle. It's the misfits. The misfit forms that they just don't belong anywhere else, and they're over here hanging together, grouped loosely together, even though they're all weird forms. So we talked about the deposit form. This time we're looking at the transfer form. All right, so we briefly discussed last time of what a transfer form is, and it's basically going between two accounts that have a bank feed within them, typically two checking type of accounts. You could also possibly use it with a credit card, which also has bank feeds capacities, but typically you might use then this credit card form instead. So we'll talk about that later. Transfer form is the one we're talking about here. Now, why isn't it in one of these other categories? Well, because it doesn't fit in a normal cycle. The transfer from, say, a checking account to a savings account or something like that isn't part of the normal customer, vendor, or payroll cycle, doesn't have a normal systematic time frame that it happens within every company, although some companies might use it periodically, such as for like a payroll process where they might transfer from their checking account to the payroll account every time they process payroll to try to get all the payroll transactions within the same checking account, making it easier if there's a problem to see what's happening in that checking account. All right, but so why do we need this form? You might say, well, if I'm putting money into the checking account, it's going to show up. I can use a deposit form, or I can use an expense form, right? Now, those two forms could be used, but the problem is that it's going to result in a kind of weird transaction form when we try to sort by the transaction detail. So in other words, the financial statements will be correct from a journal entry standpoint. It'll be correct. You can use a deposit form or an expense form, but the sorting will be looking a little bit funny, which can cause problems, and therefore the transfer form might be a better way to go. So let's take a look at an example of this to really get an idea of it, because it could be a little confusing. Let's go to this first tab here, or the balance sheet tab, where we have the checking account and the savings account. These are two accounts that have bank feeds connected to them and are cash type of accounts. Now remember, we also have this undeposited funds account over here, which is in essence a cash type of account, but that doesn't really have the same, we don't do a bank reconciliation, so it's not treated within QuickBooks as the same kind of account as a checking account or a savings account, which we can connect the bank feeds to. The undeposited funds account is an other current asset type of account. So if I was to transfer between these two, if I was to transfer from the checking to the savings account, I could use multiple forms to do that. The most likely form would be that you're going to think from the perspective of the checking account, and you're going to say, okay, it's going to be an expense form because I'm doing a transfer, which is like a check form, but it's decreasing the checking account. It's going to be an expense form. That makes sense from the checking account side of things because it'll show as an expense in the detail. So if I go into the register here, we can see what's going to happen. Well, it's going to show up as an expense, which is typical, a decrease. That's fine. But when I go into the other side, into the savings account, I'm going to have an expense form which records an increase, which is backwards. That doesn't seem right. Why does that matter if the journal entry is correct? Because if I sort by transaction type, which is common, then it's going to cause me a problem. So that's where it runs into issues. So you might say, well, I could look at it from the perspective of the savings account, which is a type of checking account. And I could say that I should use a deposit form. If I use a deposit form, what would happen over here is it would look correct, deposit form increasing the savings account. But on the checking account side, if I went into the detail, the journal entry would be correct, decreasing, but it would show as a deposit form that decreases. That would look funny. And again, it becomes a problem when you filter the data, as you often do or are most likely to do with the checking account, because typically you want to sort by transaction type. And then if I want to look at all the increases, then it's going to be difficult if I have some increases that are like expense forms, right? That's going to be an issue. Now, so the transfer form is nice because it's kind of ambiguous. A transfer form could be an increase or a decrease. Now, note that that comes with its own problems, however, because I would like to sort oftentimes by all the increases or all the decreases. If I look at a form that could be an increase or a decrease, then I'm going to have a transaction type form that might mess up my thing when I'm trying to figure out all increases or all decreases. So there's no perfect system. So in other words, would like to say that it's possible that you'd say, I'm not going to use the transfer form. Let's do this exit without saving. You might say, hey, look, I'm just going to look at it from the perspective of the checking account because that's the account that you're most likely to sort and filter by. And you might just say, hey, look, if I'm transferring from the checking account to the savings account, I'm just going to use an expense form. That will mean that the savings account will have an increase with an expense form, but I don't really care about the savings account because there's not too many transactions. It's easy to see what's happening in the savings account. It's the checking account that I want to make sure that I use the proper form that looks correct directionally so that I can filter. And that way you wouldn't have transfer forms which would muddy up your system and you'd have all increases with deposits, all decreases with expense forms. Or you can add the transfer form. If you add the transfer form, then when you look at the decrease from the checking account, you're going to have to include the transfer form. And you also might have transfers from the saving to the checking, which again means that the transfer form could be an increase or a decrease, which will muddy things up. In other words, if I look at it from the checking account perspective, I might say, hey, look, I'm just going to use an expense form, transfer from the checking to the savings, and a deposit form when I transfer from the savings to the checking, so that from the perspective of the most complex, detailed account, the checking account, the forms are correct. Deposits and expense are all I have. Or we can use a transfer form. So let me show you what I mean. If I go to the first tab here, also remember that if we think about the bank feeds in the transactions tab, then both of these accounts are going to be connected to the bank feeds, the checking and the savings. So if I wait till the transaction clears the bank and it was a transfer from the checking to the savings, it's going to show up as a decrease in the bank feeds here. And the bank feeds might automatically match it. It might see that it's on both sides and use the appropriate form of a transfer form, but it might see it as a decrease to the checking account, so it might try to put it in here by default. The decrease would be an expense form. So you want to kind of watch out and be careful for that when you have transfers, and we'll talk more about that when we get to the bank feed section. If you went to the savings account and it was a deposit, then again, the system will probably be able to see, like here, it sees that there's a match on the other side for the deposit, which might be a transfer, and so you would record it as a transfer here, which would be a different type of form. If you don't do that, it's going to record the deposit as a deposit form, typically. Okay, so let's do this manually and just check it out. So let's say I'm going to go from the checking account to the savings account, and let's first do an expense form just to see what that looks like, so you see what I'm talking about. So I'm going to say, all right, let's do an expense form, and we're just going to say it's going to be an expense form, and I'm just going to say it's a transfer. I'll just use transfer as the vendor, and I'll just say it's going to the checking. It's going out of the checking account on 117. That is fine. And then I'm going to say down in the categories, I'm just going to say, let's make a category for, hold on a second. It's going to be into the savings account, the bank account. So now normally in the category, it would go into like an expense account or possibly property, plant, and equipment, but I could just put the other side to the savings account, which would be another asset type of account. And then I'm going to say that, let's say it was just $1,000, and we're not going to have any customer or anything. So what's this going to do? Well, it's an expense form that decreases the checking account, and the other side is going to go into the savings account, which is determined by the category, which is correct from a journal entry standpoint, but the form will look funny on the savings account side. It'll look normal on the checking account side for the most part, right? So let's go ahead and save and close it and just check that out. So if I go back on over here and I say, okay, what happened? Que paso, run it to refresh it. And let's go into the checking account to check it out. I put it down to 0. I got to use the smaller dollar amount. But there's the transfer, there's the expense form. Let's make it smaller so I don't end up with a negative number when I do multiple examples. Let's go back into it and just make it like $100. Let's not get crazy here. $100. Save and close. All right, so now we transfer the $100 out, and it's not a transfer form, it's an expense type of form, which looks correct over here because it's decreasing the checking account, making it easy for me to filter by transaction type, because if I have all my decreases as expense forms and then any other form I have to use, that would be like a payroll check form or a bill pay check form or sales tax check form. But if I have less of those complexities, it'll be easy for me to filter by transaction type. So let's go back on over. But then if I refresh it again and go into the savings account, now I have the expense form, which should be a decrease, but it's increasing over here. And it put it in there. It didn't refresh. Let's go back. It should be $100, shouldn't it? Que paso, run it again. All right, there's the $100. So that's what looks funny. Now, again, it's not so bad on the savings account because I can say, hey, look, I know I made an expense form because I'm using the expense form to take it out of the checking account to make it right on the checking account side. The journal entry is correct, but it looks like an expense form. And usually with these checking accounts, expense forms would decrease, but I know that it's going to increase here because it was a transfer given by the name that I put here, and I could put a memo that it's a transfer. All right, let's go back. Let's do it the other way. Let's say that I'm going to take money from the savings account and put it into the checking account. From the checking account's perspective, then that would be a deposit form. So I would say, okay, let's go back on over here and say, let's make a deposit form and say, what would that look like? You could also do this in the check register. I'm going to say it's going to be the checking account. Let's make it on the 18th this time. And then I'm not going to check anything off up top. I'm going to record the transaction just to another account, which is going to be down here. And we're just going to call it the savings account. So it's coming from the savings account. let's just say it's $25 this time. So what's this going to do? It's a deposit form. That means it's going to increase some kind of account. We named it the checking account. The other side's being assigned to an account, not to undeposited funds, as these two items would be up here. And that's going to be the 25. Now, again, from the checking account side, this will look correct because it's a deposit form. But from the savings account side, it's going to have a deposit form that's decreasing the savings account. So let's go ahead and save and close it. And we're going to say, okay, let's go back to the balance sheet, run it to refresh it. And then if I go into the checking account, so now once again, let's see, we had the credit card. Let's go back and refresh it again. Fix it, man. QuickBooks. There it is. So there's the deposit form, $25. It looks correct because it is a deposit form. The deposit form is not showing that it was a transfer, but it'll be easy to filter by increases now, which are all deposits, right? And then if I go back on up top, then I can say on the savings account side, all right, let's go back and refresh it again. Come on, man. QuickBooks. Pull it together. So now we have a deposit form that is decreasing. So you can see the savings account is backwards. All right, so what if I don't want the savings account to look ugly like this? We can use the transfer form, which I could use going either way because a transfer could be an increase or a decrease. So let's go back and use the transfer form. So now let's say we're going to go from the checking to the savings, but instead of using an expense form, I'm going to use the transfer form. So we'll use the transfer form, and we're going to say transfer from the checking to the savings. And let's say that this is going to be $10. So keep on going down in the dollar amount. So let's say on the 19th, let's say. All right, so now what's this going to do? Well, it's a transfer, which means by definition, it's going between two accounts that have bank feeds, noting that that includes credit card accounts. So I could use the transfer for credit card accounts here. And I have other accounts that I could use the transfer form for, but typically you would be using it for forms that have bank feeds, typically is the general idea. So we have a memo here, transfer. We can have attachments if we need them. We can make it reoccurring, which you might do if you were transferring on a periodic basis from the checking to the savings, and you wanted to make it automatic or something like that. Although you might do that through the bank feeds. Okay, but in any case, let's save it and close it, and then we'll check that out. So now I go over to the balance sheet, run it. Let's run it again just to make sure QuickBooks saw that. And then go into the detail. So dang it, QuickBooks, it's not there. I told you to refresh. Let's go back and refresh it again. What's wrong with you today? All right, so here's the transfer. So you can see the transfer now is a decrease. So this 100 and this 10 are the same kind of transaction. It's doing the same thing, decreasing the checking account and going into the savings, but this one's with an expense, this one's with a transfer. The transfer gives me more information because it tells me, look, I can see by the form that it's going into another bank feed account, typically another like checking or savings account, right? That's great. However, when I filter, if I filter by the forms, it's going to be a little bit more messy because I'll have to filter by transfer. I'll have to add the transfer as another thing that's decreasing the checking account. Let's go to the other side and say, all right, let's check it out on the savings account side of things. There's the transfer form. So now so this expense form, which looks funny, is now replaced with a transfer form, which looks better on this side, right? So that's kind of nice. Now let's do it the other way. Let's use the transfer form saying we're going to put money from the savings account to the checking account and use a transfer form for that. And that will show us the problem on the sorting system because now the transfer form could be increasing or decreasing, which means that if I filter by form, it's going to mess me up, right? Because now I have a transfer form that's going to be decreasing when I'm looking for increases and increases when, right, possibly. So let's try a transfer form again. This time it's going from the savings account to the checking account. And let's just put $5 this time on the 20th. And so what's this going to do? It's going to decrease the savings account and it's going to increase the checking account by $5. Let's go in there. Let's go back to the balance sheet and run it to refresh it. See if QuickBooks picked it up. Did it refresh? There it is. So there's the transfer of the $5. So this $5 is doing the same kind of thing as the deposit form that we did before. We did the same thing with a deposit form. Now we're doing it with the transfer form. That makes it easier for me to see, hey, look, this must have been a transfer from, it's not coming from a customer. In other words, it's coming from another savings account or some other checking account. That's good. That's useful. However, it makes it difficult for me to transfer by increases or decreases. Because if I want to see all of the transactions that are increases, I would like them, it would be nice if they were all deposit forms, right? Because if they were all deposit forms, then I don't have to transfer by, I don't have to pick as many transactions. Whereas if there's, and if I enter the transfer form, it's going to have some of them are going to be decreases. So I'm not going to have all increases if I filter by just form. So it's going to be a little bit more complex. In other words, let me go back and go into the 2024 detail so I can see that. See all these different form types? Those different form types are cool, but they're all basically either deposit or expense forms, which are the baseline form to increase or decrease, or you might say deposit or expense type forms. And so the more forms you have, the more complex it's going to be if I want to filter over here by just the increases or decreases, which normally I can do by transaction type. So now I have transaction type. If I wanted to look at increases, I could say that I want to have deposits, right? And that would be the main thing that increases, right? And then I would just have the increases with deposit type forms. But if I also have transfer forms, then I'd have to go back in here as well and say, okay, I want deposit forms and, transfer forms. Where are those? Transfer forms. So now I can select multiple forms, but the problem with adding transfer forms is they might not all be increases. They might also be decreases. So that's where it gets kind of messy. All right, that's the idea. By the way, I should have not deleted the account. I should have kept the account, and I'm going to say it's sorting by the checking account, and then add another filter. All right, so here we have it. So I've done one filter by the account because I'm in the transaction detail of the checking account, and then that's going to be equal to the checking account, and then the second filter is where I said transaction type, which is this field, and then it's equal to, and we said then the deposit. So that's how you might do the filters. Otherwise, it's going to delete the transaction type that you're in the checking account and do like the whole general ledger kind of thing. But anyways, that's the point. We're on the transfer form. If I go into the other side, exit without saving, into the savings account, you can see over here now, you've got the two transfer forms. So this was a transfer for the decrease. So again, the two transfer forms could go either way, either an increase or a decrease. And when I use the filtering options, again, you have that's where it comes into play. That's where the transfer form really comes into play. Because again, if you're like me, I learned accounting mainly from debits and credits, like journal entries. So you're more likely then to say, well, what's the difference? If the financial statements are going to be the same, you're going to have the debits and credits are the same. It doesn't really matter, but it could matter when you get into like these filtering options and whatnot. So it might not be the biggest deal. It might not be a big problem, but you might want to think about it and say, okay, if I'm moving money from one checking account to another checking account, then what would be the best format for me to do that? Do I want to focus just on keeping the checking account data as clean as possible so I can have as few form types as possible, using possibly deposits and expense form, even though it'll mess up the savings account. But I'm not worried with that because the savings account doesn't have as many transactions, so it's pretty easy to figure out what's happening. My focus is on the checking account. Or do I want to use, say, the transfer form so that I look at the pros and cons? It's going to have increases and decreases. It's going to make it more difficult to filter, but I can tell by the fact that it says a transfer form that it's not a deposit from a customer or an expense for goods and services, or for goods and services that we purchased, but rather a transfer between the two accounts. Okay.